One of the key ideas in strategy is that we have choice about where we operate. So we may be in a particular industry, but we can choose to focus in different segments of that industry, perhaps higher price point, lower price point, overseas markets, or stay at home. And this is a very important choice. And in making that choice, we have to think about a number of factors. And one of those is how attractive are those segments in general. And therefore, being able to evaluate attractiveness and understand what makes a segment or a market or an industry more or less attractive is a key skill. So the first thing I would say is there are different dimensions of attractiveness. Typically, they are size. Most organizations would prefer to go into big opportunities. Growth and profitability are three dimensions of attractiveness. Now, size and growth are typically measurable, at least today's size and today's growth rate. And the one that's trickier often is profitability. Sometimes it's possible just to get loads of numbers that tell you whether a market is attractive or not. We know that pharmaceuticals in general is more profitable than airlines. There's sort of big industry studies that show these things. But it's often quite hard to tell if you're looking at different segments within pharmaceuticals, or if you're looking at different segments within airlines, or if you're trying to predict ahead as to how will the industry evolve. Will the pharmaceutical business maintain its level of profitability, or will it subside? And so this is where we have a number of tools and techniques to help you. Now, the first tool that I would like to talk about is to think about how profitability is driven by two particular factors, what I would call the value created and the value captured.
This is quite complex, so let me try and give you an example. If we think about coffee shops, there are some very, very profitable sites. For example, the centre of cities where there's a lot of footfall and a lot of people going by. You could easily imagine having a very profitable business. And so what I would say is that is a site that has the potential for very high value creation. It scores very well on that dimension. Now, the next question is how much of that value gets captured by the owner of the coffee store? Well, on the face of it, they get all the value. However, that's not necessarily the case. For example, the landlord might charge a lot of rent, so that some of the value created goes to the landlord. Or a new shop might enter nearby, which means that some of the value created actually gets siphoned off to another coffee store. Or perhaps if there's lots of coffee shops in the area, there's some price competition. The owner has to cut the price of the coffee, in which case some of the value created by that store goes into the pockets of the consumers, or at least they pay less for their coffee than they might otherwise have to do, than they would be prepared to pay otherwise. So there are these two factors, and I'd just like to illustrate that on this little matrix. First of all, that city coffee shops create a lot of value, so they will appear in the top half of this matrix. If there's no competition, the landlord doesn't put up the rent, then the coffee shop can be in the top right-hand corner, where the owner gets all the money. However, it's possible that because of these new entrants or the landlords or the need to cut price, actually the incumbent, the owner of the site, doesn't actually get most of the value. It goes to somebody else, in which case we're over on the top left of this chart. If we now consider a different kind of coffee shop, perhaps one in a small town, perhaps that's not as profitable a site. There's not so many people walking by, they don't have quite so much money. So on this chart, they would appear in the bottom half because there's not much value created. However, if there's no competition, if landlords can't really raise the rent because it's not that desirable a property, and there aren't many other coffee shops around, not many new entrants want to come in, the saving grace may be that most of the value can be retained by the owners of the coffee shop, in which case it would be in the bottom right-hand corner. So I hope that illustration kind of suggests differences between industries and how these two factors, value creation and value capture, drive the overall profitability of the industry. And perhaps it's worth you thinking a little bit about which of the boxes your industry falls in. It may well be that in some segments of your business you're in the top right, in others you're in the top left, and in others you're in the bottom right, and so on.
And in the next video, I'd like to explore value capture in more detail.